TradeStation 10 has been officially released. I want to show you the latest on the money management algorithms. I want to talk about a specific algorithm called the degradation algorithm. Here's our Cobra CT5B strategy that has served us well in the past. It's gone sideways since about 2014, and I've tested this degradation algorithm for a while, and it's one I want to talk about. All strategies eventually go sideways to down. The markets change, volatility changes, there has to be an adjustment. And so this degradation algorithm will help you with this. I want to show you what happens when we apply this degradation algorithm. It's just part of the money management algorithms that you can use to get in at better prices in it. And this one combines rules 6 and 12, and we'll go over that in a minute. But I want to talk about this in theory for a bit. We tested this in the past, and we've seen this recently. We keep coming back to this degradation algorithm. So today I applied it to Cobra CT5B without optimizing. I just used some manual inputs that have worked on strategies that I've seen, and it worked well. So we apply Rule 6 with a $50 loss and Rule 12 with a $1,000 drawdown and a $1,000 run up. We get this. Most importantly is it's done well in the present. And so instead of worrying about your strategy not performing or hoping it doesn't go into a drawdown, you can almost welcome these drawdowns when you use the degradation algorithm, because it takes advantage of buying the dips in these drawdowns. Now, if you get an equity curve that just goes straight down, then it wouldn't work as well. But most of the time, a system will chop and go sideways to down when it stops performing. And so this degradation algorithm will take advantage of that underperforming algorithm. We talked about this in the past. We released a strategy and showed a video on pessimism 1, and sometimes it's better to be pessimistic rather than optimistic about your algorithm. And so we want to develop the best strategies we can. We let them run, and then when they start to struggle, you can turn on this degradation algorithm to where you buy the dips and then sell the rallies and be optimistic about a pessimistic outlook, if that makes sense. And so here is the original strategy once again for Cobra CT5B in the money management algorithms. And if you have these, this is an algorithm you can set up for this and trade. And you see the drawdown is 38.1250, 47.91 average trade profit, total net profit 32, profit factor of 1.47. When we apply this degradation algorithm over here on the right side, your total net profit is less because you're trading less, but you nearly double your average trade profit, and you nearly cut your max drawdown in half, and you get a profit factor of 2, and you get a nice equity curve that is responding well in the current market environment. And so what are the settings for those? I'm going to show you those. So let's right click and then click on studies and then edit strategies, and you see the MM1 money management equity curve algorithm Rev 7.0. At ES.D is the symbol on the left. The 3-minute interval is a symbol on the left. We're trading one contract using a limit entry at 1 tick greater than at the close of the par once the conditions below are met. And the degradation algorithm includes Rule 12 primarily, and then one of these other rules such as Rule 6. We used a combination of Rule 8 and 9 in the QS strategies. And so on Rule 6, it's a pinpoint entry algorithm. We're looking for a better price. The inspiration behind this is basically every time I get in a trade, it at least goes against me by this amount. And so it's easy to say that most trades have gone against you by $50 in the ES or 1 point. And so even if that's not true, sometimes this degradation algorithm works better going forward than it does in the past. Because if a system starts to degrade, you can buy dips in the equity curve, whereas if you back test it, it might show that you missed some big winners. But if a system degrades, then you can get in on these drawdowns as the system equity curve moves down or sideways. And so Rule 12, you buy the drawdown, you get in a $1,000 drawdown and get out on a $1,000 run up. You can vary that depending on the maximum drawdown on the base strategy. If it's a small drawdown like 4,000, you might use between 1 and 2,000. The bigger this number is, the lower frequency less trades you'll have. And so if you want to stay fairly active, most systems at least go into $1,000 drop per contract drawdown pretty frequently. And then use the original system rules here. True, one, these didn't change. These all stayed the same. And they're just based on the original strategy setups. $500 stop loss, and we get out when the original strategy gets out. And so that's the setup for the degradation algorithm. Again, if you want to set this up on a strategy, if you're worried about your strategy underperforming, apply the degradation algorithm, which is Rule 12, and then one of these other rules like Rule 6 or a combination of Rules 8 and 9.